YouTube, my name is GT, and if you're new to this channel, we provide meaningful information around fitness and finances through interesting conversations like the one we're gonna have today. Now, if I were you, my biggest pieces of advice before I even talk about what I'm about to talk about today is I would consider bookmarking this video. You will need this video between now and the rest of the year, because we're going to talk about what is the plan with investing in the stock market and how you will manage your 401k leading up to what's going to eventually be the recession, which is going to knock the stock market down at least 20%. Now, you want to go past this and potentially lose your money and see your 401k get wiped out, just like perhaps your parents or your grandparents did back in 2008 or even in the late 1980s, then I will tell you to skip the video. But if you're really trying to figure out how are you going to navigate what is ultimately inevitable that's going to happen, then I would encourage you to watch what we're going to say in this video, understand very clearly what the plan is, and if you have any questions following this video, definitely be sure to comment below, and we'll be sure to address any questions that we can and provide any guidance where necessary. Of course, this is not financial advice, but as you know on this page, we are specialists in the fitness and the finance world, and we're about to show you today just what we are seeing in the charts in the S&P 500 and what you need to do and consider doing to get ready for what's about to happen. Now, going into the beginning of the year, of course, Donald Trump became the president of the United States, and we knew we were going through interesting times. Now, this is not a political channel. I don't care who you voted for, whether you like Trump, whether you like Biden, whether you like Mickey Mouse. It doesn't really matter. This page is about our money and how are we going to pursue financial freedom. The reality is that this situation that we find ourselves in today had preceded the current president. This started even before the previous president. This has been an ongoing journey for multiple years, and there are various reasons why the market has been allowed to remain elevated when it should have already crashed years ago. Number one, the pandemic happened. The pandemic threw off the entire trajectory of how the stock market was supposed to go. The market was supposed to have crashed back in 2019. Pandemic came, threw a wrench in everything. And if you recall, our current president, Donald Trump, started forking out stimulus money to pump the economy. So what happened? People started getting access to dollars and then putting their dollars into different investment opportunities. Crypto, stocks, GameStop, AMC, all these companies, these penny stocks, and they started shooting through the roof, and people were getting access to some crazy amounts of money, which started this inflation trend. From there, we started getting rate hikes from the Federal Reserve. The rate started going up, and as the rate started going up, the stock market started to correct itself. But then something occurred. AI became very relevant. And so companies like NVIDIA and AMD and others, Palantir and others, Tesla, all these companies started pumping because the AI boom began, and we got into what was called the AI bubble, where in the United States, all of the AI companies started becoming overvalued because everyone that had all this money that started from stimulus money with Donald Trump that inflated the economy started running into the AI bubble. And then we had a new president come in with Joe Biden, and then we were on a journey where there were mishandling of the funds and how we were managing our economy. So much so that there were 2 negative GDP quarters during the Biden regime. According to the definition of a recession, is when you have 2 negative GDP quarters. So technically, we had already been in a recession. But then what ended up happening is the government changed the term of what that was and said, no, we're not in recession. We're in something else that seems like a recession, but we're not. And the economy continued to keep going. Then we had another transition in presidency, and here we are again with Donald Trump. And leading up to his presidency, the market ripped again. And now we are in 2025, and there is talks of tariffs. And we are being led to believe that the tariffs are the reason why the market is sinking. Although there is a catalyst with the tariffs involved, that the current president is contributing to these issues. The reality is this economy is overheated and overvalued, and there is a correction that is due. So much so that there are already cracks showing itself in very quick order. Number one, the gross domestic product. That's called the GDP. This measures how profitable we are as a country in the United States through all the companies that we are. How are we making production? Are we producing? Are we advancing forward economically? The GDP is coming down. So it is starting to recede, okay? The next thing, auto manufacturers. They are already indicating that there is a slowdown in auto sales. That's a problem. The next catalyst, credit card debt is at an all-time high, and loan defaults are now at an all-time high. People are unable to pay their debts, which is leading to another problem. Over 65% of Americans are living paycheck to paycheck. If you're watching this video, you may very well be living paycheck to paycheck. Quick plug to the side before we continue is, number one, I would tell you, you do need a plan to free up some cash sooner than later. I'm not here to scare you, but I'm definitely here to prepare you, and you definitely need to come up with a plan to free up some cash immediately. And if you need help, which is part number 2, in the link below, we're going to give you the link to consider joining our financial community. We'll start with a free assessment, get you on a plan to set you up for success, because you will need to be set up for success heading to where we're going next. Now, going back, the next detail, mortgages, the amount of new home sales, people actually buying new homes, has drastically dropped in the last 6 months. So a lot of people are unable to buy these new homes. Why? They're too expensive and they have no money. So you have overvalued companies that people are investing into, and it doesn't seem that people have the means anymore to buy commodities and things such as cars, homes, and they can't pay off their debt, and you have overvalued companies. Well, if you can't afford to continue to invest in these companies, then these companies need to recede. And ultimately, we are indeed heading to a recession. It is going to happen. Don't let anybody tell you otherwise. This market does not have the ability to just continue to run forever. We are going to recede. But what we need to figure out is, when are we going to recede? And when the recession comes, what do we do to protect our retirement, our investment funds, and ultimately our money, so that we don't find ourselves struggling like a lot of people were in 2008. So I'm going to take you guys really quick into this chart, which is the S&P 500. And I think it's going to tell us a story as to what could potentially be the time where we could see the beginnings of the recession that we're ultimately waiting for. Follow me into the chart. Okay, so this is the deal. This chart here represents the S&P 500, okay? We've talked about this many times before. I've done these chart analysis, and if you like when I do these chart analysis, definitely be sure to give it a like, this video a like. Like that, we can continue to find ways to give you guys content and financial literacy every time we're on here. So in this chart here, in the S&P 500, what we can see here is we have clearly seen a downtrend, occurring over the last several weeks to few months. This actually leads to around the time in maybe middle-ish of February when we started hearing about the word tariffs. So tariffs was a great way to segue politically the blame as to why the market is receding. But I go back. This was inevitable. And no, it did not start with the previous president. This has been going on for a few years. This is an ongoing story. And I'm going to go back. This recession should have probably happened 5 or 6 years ago. Trust me on that one. So going back to the story, what usually happens is that going back, and I've talked about this in previous videos, when you go into investing, each of these candles represents, whether it's buying or selling and whatnot, it represents a room, right? You're going in, I've used this analogy before. You go walking into a dark room. You have a bouncing ball. The ball bounces on the floor. The ball's on the floor. And then from the floor, it should bounce up to the ceiling. And in the ceiling, it should bounce back to the floor. If something changes in the room, the ball will either go through the floor, which means it goes down a level, into a new room, which means that floor now becomes the ceiling. Or if the ball bounces and then it goes through the ceiling and breaks through the ceiling, then the new ceiling in the new room is the new floor, and then the ceiling goes up. What we are seeing here is what we want to observe is that clearly our all-time high on the SPY, ticker symbol SPY, was around $612. We have been on a downtrend ever since. So what we are wanting to see is at some point we are going to have to recover. It appears per the chart that around 548 on the SPY was when we bounced, okay? We bounced off there and now we are heading back up. So in a great scenario that the recession is not happening, everything is cool, everybody's good, this ball bounces all the way back to 610 or 611. And if we're really in a good scenario, it breaks through 611 and keeps rising, because that means it broke through the ceiling and it went into a new room. That means the good times are going to continue to roll. I don't see that happening, not even close. Now, could it happen? Of course, nobody can predict the future. Now, what I'm looking for now is when the ball bounces, there are 3 levels I'm looking at, which is first the 200 MA, which you can identify through the purple line. You've got the 100 MA, which is on the yellow line, and then you've got the 50 MA, which is the blue line. Usually, what you like to see is the blue line at the top. You want to see the blue line at the top, but as you can see in this chart, the blue line has crossed over the yellow line, which means it's showing right now a potential downtrend. The key number on the SPY we are looking for is 590. That represents right now the inflection point between the 50 MA, which is the blue line, and the 100 MA, which is the yellow line. If it does not break through that line and rejects at 590, that represents now the new ceiling of that room. Currently in the room we are in, or were in, the ceiling was $612 and the floor was $548. But if the ball bounces and we bounce down from the yellow and blue line, which is 590, then we are in a new room. And then what we're going to want to see is if the ceiling is lower in this room, does that mean the floor is lower in this room? And if it's lower in this room, that means that when we reject from 590, that means we are falling well below 548. And that fall goes very low. Now, what does this mean? This means that essentially we are ultimately waiting to see what happens with the SPY when it touches $590. okay? When it gets to 590, that is going to be the pivotal moment as of right now in the stock market. If the stocks reject at 590 and we can't continue to rise beyond 590, at that point in time, you're going to have to make a couple decisions. Number one is that, A, are you going to stay in the market? If you're a young pup, in your early 20s, 30s maybe, you may want to ride the wave and just continue to buy through, understanding you're going to go down, but you're going to keep buying them at discounts, the shares and the companies and all that, and keep your retirement intact. Just understand that for a period of time, maybe it's a year, maybe a year and a half, God forbid it could be longer, you're going to see your investment accounts and your retirement accounts taking a whacking for a period of time, and you're just going to have to stomach it and understand that eventually the market will rebound. We just don't know how long it's going to take. Option number two, around that time, you sell out of everything. Who would be somebody that would sell out of everything? Maybe you're on your tail end of your professional career. You're about to retire. You're a year away from retirement. This is the year you're going to retire. Maybe you're going to retire in 2 years. You got a large sum of money, so you don't want to go backwards. And so right now, this might be a good time to park it, sell out of your positions, and then you roll your money into, let's say, for example, a money market account, which is not paying a lot of interest, but what you're not doing is losing money. You may not get significant gains, but if the market is receding, this is not a time to get significant gains because you're only going to get significant losses in investment. You move it and you put it into a money market account. That's one bucket. A third bucket, just because the United States is in a recession and the stock prices of the American companies are going down, doesn't mean that all stocks, all companies, all countries are all receding at the same time. And so I would tell you, is there maybe that could potentially play a factor in regards to who you can invest into, and maybe there it could be a safe haven for you to hide your money in there through those companies, through that country, as the United States economy goes through a recession and then later rebounds. So those would be my 3 pieces of advice. My thing I would tell you is that I would be very alert as to what we said about the SPY at 590, that you keep your eyes in full alert, because the last thing you want is that you weren't prepared when that happened, because a recession will be coming. And when that comes, you didn't have a plan, because at that point, what happened in 2008 is going to repeat itself now. And then you and I could find ourselves years behind on our financial goals. You like content like this, all I gotta say is, again, number one, you gotta bookmark this. Definitely like this video. If you like the content that we're talking about, share this with somebody you know. Review this video. If you have any questions, comment below. Again, we're here to support. We did this page to support people, share our knowledge, share what we know. RJ, with his fitness component, provides a lot of content and information on the fitness side. I do a lot of stuff on the finance side, but we do this because we care about people. We want to give people good information. But if you really want to transform and level up on your journey, number one, subscribe to this page to stay alert on what we're dropping for content. And number two, would encourage you to consider joining our financial community so that you stay plugged in day by day with plan and sound strategies that's going to help you and your family in your financial journey. And if you like videos like this, you're going to like the next one.